Hello and welcome to our Minds and Money 5 at 5 show, which today is sponsored by Hammer Metals, New Century Resources, sponsored by Hammer Metals, New Century Resources, Red River Resources, and is brought to you in association with the Resource Global Network. This 5 at 5 forms part of our Minds and Money online Global June event, running from the 22nd to the 24th of June, which I'd like to thank our lead sponsor, Trade Investment Queensland. For those of you attending the show for the first time, the aim of 5 at 5, 5 guests at 5 p.m, is to maintain engagement between investors and miners through a lively interactive format whilst we wait the return of physical events. To ask a question, you've got a couple of options. You can either ask a question in the chat box in the chat box function, which I posted a welcome remark at the bottom of your screen, or you can also ask your question live. Click on the invite participants button, ask to be unmuted, and you can get to ask your question live. We'll also be having some polling questions throughout the webinar where you can vote. For today's show, we have a great lineup of guests. They are Kate Southwell, General Counsel of Pala Investments, Dan Thomas, Managing Director of Hammer Metals, Patrick Walta, Managing Director of New Century Resources, Mel Palancian, Managing Director of Red River Resources, and Kevin McElligott, Managing Director Australia for Franco, Nevada. So to go and start off the show, I'd like to bring up an opening polling question. Perhaps I can ask my colleague Lane just to go and bring up the polling question now. And the polling question is very easy because we've got some mining projects which have one thing in common, which is Queensland, is do you invest in Queensland mining projects? So whilst you're voting, I'd like to sort of turn to our two investor guests and ask them to each pick one news story in the mining industry which has caught their attention over the last week. Firstly, I'd like to turn to Kate Southwell of Pala. As I mentioned earlier, Kate is General Counsel for Pala, with responsibility over all legal, regulatory and transactional matters relating to Pala's investment activities. Kate, may I ask you what news story has caught your eye?
Thanks, Andrew. Good morning, good afternoon, good evening, everyone. Well, it's funny, we were talking as the panel earlier and lamenting the ongoing travel restrictions. And I think for me, one of the greatest stories of the recent times is the perfect storm of COVID travel restrictions and rising labour costs and how that's impacting mining projects. And in particular, last week, we saw Fortescue announce, I think it's up to $1 billion and 900 million US over capital expenditure linked to the rising labour costs and capital costs of mining. And that's having a tremendous negative impact on the industry. And actually Bloomberg yesterday released some stats that were quite extraordinary. Potential impact of up to 105 billion Aussie dollars if these shortages are not addressed. And I understand many of the mining associations, including particularly in WA, have been canvassing and campaigning for additional visas to get more skilled workers to these projects. So for me, that's one of the news stories that is the perfect storm of COVID plus rising commodities, and it remains to be seen how that's going to impact mining projects going forward. But certainly we're seeing a lot of downgrades in production and rising costs.
It seems to be quite like a complex problem. Are there any kind of quick fix solutions from your perspective, Kate, or?
Sadly not. I mean, over to the Aussie guests who know more about what's happening on the travel side. But from what I can tell, Australia does not look like it's relaxing, interstate travel considerably, and certainly not international travel for at least 12 months plus. So this is a problem that I'm very interested to see how the industry reacts.
Well, certainly. Sorry, you see a lot of pushback, or you will get some pushback on the travel restrictions, but by and large, in Australia, amongst the general public, the travel restrictions are very popular. The last thing anybody wants to see is more COVID around here. So there's really no support for relaxing travel restrictions right now. It's
Would you, Kevin, or any of our Australian guests like to hazard a guess when you think that the travel restrictions will be relaxed or lifted?
I was hoping by the end of this year, but that's sounding a bit optimistic now at this point. It sounds like it's going to be getting into next year. Very few people have had 2 jabs, so.
I think there's maybe two potential solutions. I mean, one is trying to find skilled employment in Australia, which would be good for Australians, good for the economy. But also, you know, there's a question of whether you can safely allow people to come in from abroad if they've been sufficiently quarantined, tested, etc. Problem is that's very expensive.
Yeah. What's news story would you have picked, Kevin?
Oh, that's funny. How much time do we have?
You got as long as you want.
I'll tell you. You know, I opened up my news this morning, and the top news item. We won't talk about this, but it was BHP delaying an investment decision on the Jansen potash project, and that was. I thought that's not top news. They've been delaying that for 10 years. Must be a slow day. But what caught my eye really was a group of several Aboriginal groups, or the representatives of several Aboriginal groups, came out recently in opposition to some proposed changes to the state legislation on the Aboriginal Heritage Act here. And this all goes back to the Yuckin Gorge demolition last year in the Pilbara, and some historic sites that were lost. And I started reading into this, and I thought, oh God, this is just terrible. I mean, they haven't, the state government here hasn't even tabled draft legislation for discussion in Parliament, and already you've got Aboriginal groups coming out in opposition to it. You know, really almost jumping the gun on it. You think, geez, you know, this is something we have to get right. You know, we can't be fighting about this forever. Obviously, there's a wide variety of groups, so you're never going to have unanimous support, but certainly, I certainly wouldn't want to see a state government coming out and tabling something that doesn't have a lot of support within the Aboriginal community. And this is something we can flip back to, you know, because the theme here is Queensland. All these state acts, they across Australia, they often copy one another. And the legislation in WA, there will be mirror legislation in Queensland and other states. And I'm curious to see what some of the other states have done if they've recently updated their heritage acts.
I think there's an interesting follow-up question from that, and a question just to bring in our three mining guests, maybe starting with Mal and then going to Patrick and then finishing with Dan, is how do each of your companies go and engage with the Indigenous communities? Perhaps I can go to yourself, Mel, from Red River Resources.
Sure. We engage early on from an exploration point of view. So, you know, if we've got any exploration work that needs ground disturbance, we engage with the local Aboriginal groups from day one, and then that sort of puts them, brings them along the journey, I guess. If anything ends up, you know, to a point where we have to, you know, get a mining lease and do native title and things like that, they've already got a heads up on the journey. So I think it's important that that, you know, you do bring them along the journey like we do with all our stakeholders. So early engagement and frequent engagement is the key. So there's no surprises when we get to the end. I think that's the important bit. And I suppose, you know, the other thing is you know, you need to go in there with an open mind, and you need to listen to, you know, what's important to them, rather than sort of, you know, make your own judgments or decisions. It's very important to just listen.
Thank you for that. Patrick from New Century Resources, how do you engage with Indigenous communities?
Yeah, Andrew, I guess New Century is pretty fortunate in that we actually inherited an act, effectively. So the Gulf Communities Agreement has been over the Century Mine since before it was developed, effectively in the late 90s. That was put in place. So we have a legislated process that's followed not only on our mining lease, but also across our pipeline and our port facility as well. So we're blessed to be able to simply follow that, follow the requirements within that act, and that's enabled us to have a perfect record of compliance and actually good relationships with all our traditional owner groups in the region.
And turning to yourself, Dan, what has been your experience?
Yeah, it's similar to the other guests. We've got a very well-trodden pathway with our local Indigenous groups. We've been operating in the Mount Isa region for the best part of 9 years. The mining community there is readily accepted by the local groups, and we have well-established legal framework with the groups, and we work hand in hand with them over any of our exploration activities. As Mel was saying, the cultural clearances and the like are just a well-trodden path in terms of getting buy-in and acceptance of our activities. And again, should anything of cultural significance be found, it's working with the group to find pathways forwards with it. I think we've seen globally what happens when you move through that development phase. And for a company like Hammer at the moment, we haven't come up against those hurdles and I guess the significance of greater land disturbance. I'd like to think, though, that the well-trodden pathway from an exploration perspective has well and truly set expectations, formed relationships, and enables a positive working relationship moving forward.
Okay. Thank you very much for that. Perhaps Elaine can ask you just to bring up the polling results. I think it was, if I recall correctly, it was something like 69% say that they do invest in Queensland mining projects. I guess as a quick closing question, Kevin and Kate, do Franco Nevada or Parla currently have any investments in Queensland?
I'll speak quickly for Parla. Yes, we do. We have an ilmenite investment in Queensland, and we found it a very good place to do business. Very supportive, very skilled workers, good infrastructure, just what you want really in a jurisdiction.
And Kevin?
Oh yeah, we've got several. There's a few at the exploration stage, but in terms of operating projects, it's the Moorvale Met Coal Mine operated by Peabody. And then in the development stage, it's the Olive Down South, another met coal project operated by Pembroke. And then there was another one operating called King Ball up further north, run by Octus, now changed hands, owned by Consolidated Tin. They'll be looking to restart that, I think, in the near future. So
okay,
it's a small one, but it's very high grade.
Okay, excellent to hear. So let's move on to our first mining update of the show. Just while I introduce Dan, Dan will just go and get his slides up on the screen. But you heard from him earlier. Dan Thomas has extensive corporate experience across Australia, North America, Asia and Africa in a wide range of commodities, including base and precious metals. Previous roles, business development manager at Samphire Resources, completing several acquisitions, investments and explorations and joint ventures. Dan has also had roles with Wesfarmers, Brambles, PTT Asia Pacific Mining and Mitsui E&P. Dan is now Managing Director for Hammer Metals. Dan, we're looking forward to your update from Hammer Metals.
Thanks, Andrew. Thanks to Mines of Money, Trade Investment Queensland, Resource Global Network, today's sponsors. Really appreciate the opportunity to give everyone an update on where Hammer Metals is at and what we're doing. Since last time I presented, we've had a full turnaround in terms of our program and what it looks like. And we're very fortunate to have had some success with copper exploration in Queensland over the past 5 to 6 months. And that's culminated, I guess, in a turnover of our register, an increase in our share price, but more importantly, a real focus on our tenure in Queensland, operating in one of the world's great base metal provinces there exploring. We made a discovery with our joint venture partner, JogMec, at a prospect called Trafalgar earlier this year, and it's renewed interest in our portfolio there. And we're really looking to build upon the 400,000 tonnes of copper equivalent metal that we have in the portfolio. Importantly, we've got a good team working for us that have been responsible for world-class discoveries historically. They're well and truly aligned with our shareholders owning 13% of the company. And we're fully funded with $11 million in the bank to fund our exploration ambitions over the next 12 months. In terms of our portfolio, we sit in between Mount Isa and Cloncurry. The highway runs right the way through the top of our tenements here. And the reason that we've chosen the ground that we have is we've focused on 2 large fault structures running through the Mount Isa region. When you have a look at the Tier 1 deposits in Mount Isa, the Glencores, the George Fishers, the Ernest Henrys, the Canningtons all occur on these major fault structures, and we've picked 2 of those fault structures that we believe are lightly explored relative to others. In fact, our Trafalgar discovery was underneath old workings from a previous mine from before World War One. And so these are the types of opportunities that sit there in Queensland untested. So we've tested a 4-kilometre trend there that's seen 2 historical drill holes in it to a total depth of 120 metres combined between the 2 holes. So our success that we've had in Queensland is going back and revisiting some of these areas that were mined before World War One at the turn of the 20th century, having some success there. And this is really looking about us building copper inventory in the region to move from just being purely an explorer through to a development company. We're well on our way with that 400,000 tonnes of copper equivalent metal across three wholly owned, 100% owned copper gold discoveries and 2 joint venture properties there. And quite interestingly, just for today's event, we released some new results from a prospect called Lakeview. We put 4 holes into these old workings. Again, very little historical exploration here, but World War One style, pulling out ore at sort of 15 to 20% copper historically. Our 4 holes here hit mineralisation over a strike length of 350 metres. Relatively narrow at the moment, but at 2% copper plus some gold, I think it's really interesting. This is the type of work we're doing in Queensland. We've got a big program coming up. We're halfway through our current drilling program. A lot more to come later this year. So I'm quite excited about our participation in Queensland. And I think with an increased copper price environment, I think these types of projects with a little bit of fresh energy and new exploration, new expenditure, I think stand to benefit, as do our shareholders. So I might pause there, Andrew, and take some questions.
Excellent. Thank you very much for that. I just invite our audience to go and post any questions they have in the chat box at the bottom of the screen. Whilst you're sending in your questions, perhaps I can turn to Kate from Kate from Parlour first. Do you have any kind of questions for Dan?
Sure. Thank you, Andrew. So thanks for the presentation, Dan. I mean, I guess the question that we always ask is what does your timeline look like? When are you going to start moving these things to feasibility and funding, etc.? Can you tell us a little bit more about the next couple of years?
Yeah, I'll talk in broad terms, Kate, and I know people don't like that, but the sort of minimum threshold I see for a copper development in this area is looking for an operation that can produce 30,000 tonnes of copper per annum for 10 years. If you used a very rough resource to reserve conversion of say 50% of the global resource getting into that reserve, I think the key number is about 600,000 tonnes of copper equivalent. We're about 2/3 of the way there. I'd like to think over the next 12 to 18 months that we can build out some sort of resources around those other opportunities that we have and look to make that leap from just being a company out there exploring through to being a development proposition. So I think that 12 to 18 month time horizon is realistic. I think it gives us an opportunity to drill out some of the resources at the exciting discoveries we have, whilst also looking to build upon some other areas there that we know there's mineralisation, there's old drill results, but they just don't have the intensity of drilling to move to a resource at this point in time.
As a question being posted from the audience from Roberto Aclanzi, is Mount Isa a priority?
It is. It's the main reason I joined the company 20 months ago. In saying that, during peak COVID, I guess, concerns, there was a lot of interest and focus on our gold asset in Western Australia. The day that we announced the Trafalgar discovery, we had 250 million shares trade on the day of the announcement. So 1/3 of our register effectively changed on the day we made the discovery, which gave us an instant audience that were keenly invested in what we're doing from a copper exploration perspective. And we've seen that trend continue. The share price has moved on the back of the copper inventory. It's fair to say that we're not forgetting about our gold assets in Western Australia. We are still keeping things there moving forward, albeit now we're mainly focused on what we're doing in Mount Isa, whilst WA takes a little bit of a back seat for the time being.
Mm-hmm. Bringing in Kevin from Franco in Nevada, what questions do you have for Dan?
Oh, look, the first one is, I don't want to get too technical, but the drilling at Trafalgar, is that a new deposit or is that an extension of the old workings and the old mineralization? What's the sort of model there?
It's an interesting one, Kevin. So without getting too technical, the project was worked in the early 1900s, pre-1914, I think 1912, as one of our shareholders pointed out. There was an attempt there in the 70s and 90s to produce oxide from the surface scratchings that were there. but there wasn't any drilling into the deposit. One of the unfortunate things around mining licenses, which Trafalgar used to be, is historical records didn't have to be filed with the department from an exploration perspective. That said, we found very little evidence of drilling at that prospect. So the 4 drill holes we put into it, stretching over 250 metres of strike length, are the first records that we have of any drilling into the prospect. In terms of mineralisation style, the magnetics don't show a large magnetic feature, so it's hard to say that geophysically there's any indication there of a large IOCG style system. In saying that, mineralisation in the drill hole occurred with magnetite, and then there was elevated levels of rare earth mineralisation, including cerium and lanthanum. So geochemically, it actually looked quite like potentially like an IOCG system. The really large magnetic feature sitting about 1.5 kilometres to the northwest, which is of great interest to the joint venture. And the region's obviously well known for its IOCG potential, and that's the main aim of what we're exploring for in the region.
There's another question that's been posted from the audience from Matthew Wilnoff. Has the remaining work with JOGMEC been determined?
It's interesting. So JOGMEC are going through a tender process as we speak. So they've had approaches from Japanese end user copper consumers to purchase their position in the joint venture, and JOGMEC have formalised the tender process to potentially divest that stake in the joint venture. Before they started that tender process, we agreed a work program and budget for a period of this year to keep the project moving forward. We're currently drilling at Trafalgar as we speak, looking for extensions to the known deposit. But I would expect over the next month or so, we'll learn how that tender process has gone and potentially have a new joint venture partner there that will be looking to accelerate activities from that joint venture, which is over approximately 15% of our land holding in Mount Isa.
Okay. Kate and Kevin, do you have any more questions for Dan? If not, I'll go and dive in with one last question.
I have one really ignorant question. What does JOGMEC stand for? Sorry.
I'm going to get this wrong, but it's effectively the National Japanese Oil and Gas and Metals Group. So they effectively make investments on behalf of the Japanese government. So that's what I thought. And this seems like an early stage investment. Is this typical for them? It is. So they've had a number of investments like this in Australia into other junior exploration companies and into projects. So their whole premise is about going out and effectively trying to secure supply of metals for Japan. And similar to, I guess, the Queensland government providing CEI funding for exploration, the Japanese government seeds early projects around the world to try and secure supply back to Japan.
Yeah, they're a very good financing partner. It's like the export development agency in Japan. And as you say, Dan, I think if you can get them on board, they can be very supportive and they have access to some very deep pockets. So it's a good strategy.
Thanks.
One final just quick question for myself, bearing in mind that the event is sponsored by Trade and Investment Queensland. I should be asking the question, what is Queensland like as a mining jurisdiction, Dan?
Yeah, it's been really, really good for Hammer. In particular, during COVID, they had a number of different ways in which they tried to keep the industry moving. Their collaborative exploration incentive grants were a fantastic way for us to explore whilst, I guess, people weren't that keen to fund exploration during peak COVID. They have a very broad view on the potential of the Mount Isa region in particular, the Northwest Minerals Province, and they're looking for a whole bunch of critical mineral exploration to keep occurring through the region. They have been very easy to work with. It's a well-trodden path. They realise the potential that exists within Mount Isa, and obviously with the large operations already there, they have been more than happy to assist where they can junior exploration to continue to fill the production shortfalls that may occur into the future with some of these mines coming offline. So I'm very comfortable investing there. I'm very comfortable exploring there. You know, you've got certainty around your assets. That highway that runs to Mount Isa's within 70 kilometres of a copper smelter. Equally, there's infrastructure that takes that concentrate out to port or the refined product to port. So in terms of an investment jurisdictions, it's one of the easier places that I've investigated doing business.
Okay, thank you very, very much for that. Let's move on to our next mining update. So can I ask Patrick to please do his screen share? Whilst Patrick's just doing that, a brief introduction. In 2017, Patrick Walta founded New Century Resources, became managing director following the successful negotiation and acquisition of the Century zinc mine in Queensland. His role is focusing on leading the company in all facets of the restarting of operations, again establishing Century as a significant zinc producer, whilst also facilitating the economic rehabilitation of the mine site. Patrick, I think your slides are up, so without further ado, I'm going to hand the floor over to yourself.
Yeah, thanks, Andrew. I had a little chuckle when that poll came up about do you invest in Queensland, and when you think about the investment that New Century's made and the contribution it's made, it's certainly the case. It's been quite significant. You know, we restarted the Century mine, we acquired it in 2017, restarted in 2018. Spent about $200 million doing that. We spend around $200 million a year in terms of operating expenses on the site. We have around 250 full-time equivalent employees as well. We obviously generate some revenues well in excess of that, which attach to royalties going back to the state as well. So we, in very quick time, New Century's become quite a significant contributor in the Queensland mining space, particularly for a junior. We've ramped the operations back up at Century, obviously initially focused on the tailings reprocessing. I'll talk a bit today about some of the in-situ resources that are coming on as well. But we're now a globally significant producer at or about the 10th largest zinc mine in the world, which in context, there's about 380 operating zinc mines globally. So it's certainly a major operation, and most of the players above us are of the likes of Glencore and Co. So it's in a good position for the business to be in. So very quick snapshot here in terms of capital structure and overview, but as we said, the operations are now ramped up nicely. We've produced north of 500,000 tonnes of concentrate. I think we've done over 1,000 batches of concentrate up our pipeline. So not only do we own the mine, we own the 300-kilometre underground slurry pipeline. We own the port facility and the transshipment vessel as well. So a couple of $1 billion worth of infrastructure that we managed to acquire back in 2017, quite strategic in the region, particularly given the Mount Isa region, and we're about 300 k's north of Mount Isa, is quite remote. So getting bulk concentrates out of that region is difficult, can be expensive. Basically, bulk concentrates, if you don't have access to the Century slurry pipeline, you're railing at 1,400 kilometres to Townsville. So a good strategic asset for us to hold as well. I'll just dive briefly into the development of some of our in-situ resources that we can do Q&A on the tailings, but that story is well told. So current focus here is on these 3 in-situ resources that we have, all on the mining lease. And the first cab off the rank is going to be Silver King, and also we'll tie in East Fault Block, it being a smaller deposit as well. Had some really, really good drilling success at Silver King over the last couple of months. So drilling into what is an inferred ore body, so doing some infill drilling there, but it's shaping up to be quite a spectacular ore body. You can see some of the results there, getting up to 66% zinc equivalent, 1,000 gram per tonne silver. So really nice ore body, very much open. It's a high-grade vein that just continues at depth. We haven't blocked that off for drilling. We've actually discovered there's probably a lot more mineralisation left in the original open pit, or the original workings. They look like they're going to be a starter open pit for us as well. And even looking at some opportunities around Silver King, where we're seeing some really good hits come up in what would be described as new veins in areas around Silver King. So it's around 2.7 million tonne at 19% zinc and lead. We see that resource expanding in the September quarter as a result of this drilling, and that'll be used to kickstart the operations. So we'll get our first underground mining operation up and running. We've got an existing plant. We've obviously got all the people, we've got the power, we've got the reagents, all the services you can think about. So we're able to get this asset up and running pretty quickly. And it's not a small asset by any stretch of the imagination, being the best part of 3 million tonnes at 20% already. So pretty exciting to see that one come into fruition over the next 12 to 18 months or so as well. I won't talk about hedging. We might talk about that during question time and that sort of thing. But I might just park it there, Andrew. We might open it up for some questions on Silver King or the operations themselves as they stand.
Okay, well, I'll probably lead in with a sort of easy sort of question as you were about to show the slide. You recently completed one of the largest ever unsecured zinc hedging transactions. How do you see the zinc market over the medium term?
Yeah, the zinc market's interesting. It certainly goes through some pretty big peaks and some pretty big troughs. As you can see, there's a graph which shows you the zinc price all the way back to 1994. So dark grey, the light grey there is the spot zinc price, and that blue line is effectively a 3-year trailing average of that price there. So last year and the last few years, as we've been ramping up the operations, have been quite difficult from a macroeconomic perspective. But the times are good now. We've seen a 70% appreciation in the zinc price from its COVID lows in 2020. And you add to that also treatment charges, which aren't shown here, but the TCs have halved. And TCs are our single biggest cost. They were about 35% of our overall cost last year, and literally it's halved this year. So it's a significant win when you combine that with the zinc price itself. So we took a pragmatic approach and elected to do some hedging. So we've hedged an equivalent price of $1.32, but it's an Aussie dollar hedge, so $3,717 a tonne, and 90,000 tonnes of production over 3 years. So it's effectively 25% of our production over 3 years. So it's certainly a material scale hedge, one of the largest hedges, unsecured hedges that Macquarie's ever done. But we were able to get that away, and good luck and good fortune. Obviously, base metal prices have come off a little bit. We didn't design for that to happen, but we'll take it as well. So we're still 75% unhedged, so we still want the price to go higher. But as you can see, the key with this hedging piece for us is the longevity, and to lock this price in for 3 years. As you can see from the graphs, it really doesn't occur. Zinc would have to defy history to maintain an average above $1.32 for 3 years. So we're very happy with the price, and that's why we thought we'd lock in as much as we can.
Okay, thank you very much for that. Bringing in Kevin of Franco, Nevada. What questions do you have for Patrick?
Well, just a quick one, follow up on that hedging. What percentage of production or reserves is in that, roughly?
Of total reserves, so it's about 25% of our production for the next 3 years. Our current reserve life is about another 6 years. That's just based on the tailings alone. And then we have these in situ resources that I was talking about just here that we'll start to bring into the operations. Ultimately, these will drive another 18 months to 2 years in terms of our operational life as we bed them down. And we're doing a whole whack of exploration outside of these as well. And the goal is to just continue the mine life. The key for New Century is leveraging the sunk capital that we own. We have this amazing infrastructure at the mine site, pipeline, port facility. It's continuing to supply concentrate up those pipelines, whether that's zinc cons, lead cons. We have a large phosphate deposit on the site. Regionally, any discoveries probably within 100 kilometres of Century makes sense to go straight up that pipeline. So there's obviously going to be joint ventures in the future should there be discoveries as well. So just continue to bring that mine life forward. Okay, and then obviously Silver King's a big story, but what about existing operations in terms of cash flow and profitability right now at the current stage? Yeah, so well, it's not listed here. We generated nearly $20 million in EBITDA during our March quarter. We flagged in recent releases to the market that we're expecting our June quarter to be materially better than that. So that's quite exciting. So the operations, the tailings operations themselves have got plenty of potential to increase metal output, whether it's increasing throughput, increasing recoveries, increasing reliability and uptime. But ultimately, what we're already producing is generating some pretty good earnings. We're expecting some decent cash increase over the coming quarter as well and beyond. And that's really being used to strengthen the business. We've absolutely smashed our debt position down over the last 12 months. It was north of 70 million January last year. we've now got that below 30 million. In fact, it'll be more around 10 million by the end of the year. So operations are generating some pretty decent earnings and cash flow now.
And the current operations are mainly tailings reprocessing, is that correct?
Solely tailings reprocessing. So
Okay.
we when we acquired the asset, the zinc price was about $3,600 a tonne when we acquired the asset. The strategic objective was to get up and running as quickly as possible and take advantage of that. So tailings represented the swing supply into the market. So we could use the existing infrastructure, repurpose it for tailings reprocessing, which was really just refurbishing to turn it back on. But also the benefit behind this is the economic rehabilitation that the business provides. So we're physically picking up the existing tailings dam and ultimately putting it back in the pit. So we're actually rehabilitating the site while obviously generating earnings.
Yeah, that was going to be my follow-up question, because I've seen this sort of thing before with tailings projects, how it's actually a net environmental benefit, because you basically take some old tailings and you reprocess it and you end up in a profitably being in a better position at the site than you were beforehand. So it's one of those ideal scenarios where you can do it.
And it's an important point as well. You know, we have we certainly peg ourselves as a positive environmental contributor. We've achieved the first ERC bonding reduction of any operating mine in Queensland. We achieved that earlier this year. So we had a $14 million reduction in our bonding requirements. And that was...
Oh, because, yeah, everybody else is going in the other direction, aren't they?
Yeah, exactly. So it's we had to work pretty hard to get that, because obviously there's a mindset change. But you know, the reality is what we do is we shrink the surface area of disturbance on the site. You know, the tailings are going back in the pit. They just happen to be going back via the existing the plant that we have there. So every day we continue the operations is a net environmental benefit.
I'm bringing in Kate from Palancian.
Oh, sorry, I was just about to jump in. I was just actually about to ask about the rehabilitation cost, because I think it's great that you managed to get a reduction of that. I guess two questions. What's your overall rehabilitation liability at the end of your operations? And does that bond now incrementally reduce as you continue to process the tailings? So do you expect further reductions of the rehabilitation bond or liability that you have?
Absolutely. So when we acquired the project off MMG, the bonding amount was around $200 million, with a couple of discounts, but let's call it just over 200 million Aussie dollars. Now, that is a number that is calculated through through legislation. So there's an ERC calculator that's supplied by the Queensland government, which essentially says as you put down tailings dams and waste dumps and evap dams, it will cost you X dollars per hectare to rehabilitate it. So it's not site specific, it's statewide. We've obviously done a heap of work in not only defining site specific rehabilitation requirements, but also physically rehabilitating. So by those two measures, we've been able to reduce that bond. The bond is currently $183 million that we've reduced that to. That is also, it's important to say, that is not the true cost of rehabilitation of the site. If we were to shut down today, and the Queensland government was to take over the mine site, that may be what the cost is, but that would be them capping the tailings dam, for example, which doesn't make a lot of sense when you're generating $20-30 million a quarter in EBITDA out of its operation. So the true cost of rehabilitation, the true cost of getting that 180 down to zero, we're seeing it around that sort of $40 million mark over the course of the mine life. So, for example, we reduced the bond by putting the tailings back in the pit. We actually use the water that's in the evap dam to hydromine. As we start these in situ operations, for example, South Block and East Fault Block are both open pits, or one South Block's a cutback, but we can use the majority of the overburden from those operations to cap the waste dumps as well. So really just using sort of innovative mechanisms to take closure costs, which are costs, but put them into an operating cost model. So you're generating revenue while also rehabilitating the site. So certainly there is a rehab cost, and we are rehabilitating, but in the face of the earnings that the operations are currently generating, it's fairly small, over this next sort of 6, 7, 8 year period.
Yeah, thank you. I mean, Andrew knows this, but I mean, I'm very passionate about ESG, and I like to see successful tailings redevelopments. They're not always as easy as they sound, and I appreciate that. But what's interesting, and Kevin, you may be interested in this, is having spoken to a number of the banks actually love financing these projects because it doesn't even come under the credit of a mining project anymore. Many of these banks see these as environmental cleanup. And obviously good for their ESG credentials as well. So it's a great financeable opportunity if you can get a tailings redevelopment that works for all the reasons that Andrew just described.
Yeah, no, you're right, Kate. We've had a lot of interest from the banks over the journey and had some good funding partners, and it's key. One of the key things about tailings reprocessing plays is scale. You know, you kind of need a big play to do it. You've got to manage those fixed costs, and you need to be able to drive that, I guess, that investment interest as well. So small little potty tailings dams are difficult to get up and running. But you know, in the case of New Century, I mean, when before we started the operations on the tailings, the tailings dam itself was the 14th largest economic zinc reserve in the world. It puts it in context about just how big the original ore body was. So Century is a unique opportunity in that the resource is huge. The plant was there, and we were able to time that and get the project back up and running quite quickly. And yeah, I agree. The ESG credentials is that we can utilise and leverage is very powerful. It's not something that New Century has put a lot of focus into. We've been focused on getting the operations into profitability, but it's certainly now one of our focuses, improving that those ESG credentials of the business.
Well, and I think your hedging program speaks to that, right? I'm sure Macquarie wouldn't have given you that kind of financing terms, including, you know, great to have no margin calls and the ability to break. So, you know, that speaks to, I think, your ESG credentials, because I know that Macquarie will be looking at that too.
Yeah, I imagine we'll be on a poster somewhere from Macquarie.
Exactly.
I think in the interest of time, we need to move on to our final mining update. So, Patrick, thank you very much. That was a great update about New Century Resources. If I can ask you just two favours. One, Kate, thank you for taking down your slides. There's also two unanswered questions we didn't get around to from Naomi Hooper and Roberto Clancy. Can I leave you to privately sort of can I leave you to answer those questions in the chat box function whilst we move on to the final presentation?
Sure.
Our final, thank you very much for that. Our final presentation, just whilst he's getting his slides up, is from Red River Resources. Red River Resources are seeking to build a multi-asset operating business focused on base and precious metals with the objective of delivering prosperity through lean and clever resource development. Mel Palancian is Managing Director, Red River Resources. Mel, the floor is yours.
Thank you, Andrew, and thanks everyone for watching and listening in. Look, Red River Resources, our main operating asset is in Queensland, in just out of Charters Towers. This is a picture of the Thalanga mine. It's around about 30 years old. This plant used to be in WA and it was relocated into Queensland, and she's going strong ever since. Just need to click right. So you can see where Thalanga is in Queensland. We've also got a really interesting play up at Herberton, which is just inland from Cairns. I'll talk about that very briefly. The company itself, its market cap's about $100 million. Last quarter, we had about 15.6 in cash and financial security bonds for our environmental offsets of around about 12.9 and no debt. So Thalanga has been, we've been operating Thalanga since 2017. So we'll be, in September this year, it'll be 4 years continuous mining. We produce copper, lead and zinc concentrates. The copper and the lead have also got silver and gold in them. Our concentrates are very high grade and very clean. So very much in demand, and you know, everything we can produce, we can find a home for. The copper goes to Glencore, and the zinc and the lead goes to Trafigura. And we've also got another project in New South Wales called Hillgrove, which is a gold antimony, and I'll talk about that a little bit later on. And our Herberton prospect, which has also got copper, lead and zinc. but it's also got the highest indium grades of any project in Australia, and really some spectacular silver. So a bit of a wild card in the business. So Thalenga, look, it's been going for a very long time, and we make some beautiful concentrates there. We've got a resource of 6.7 million tonnes at about 14% zinc equivalent. Look, we've done a lot of drilling there, and we've had some great success since we bought it. And really, 3 out of every 4 holes that we drill become an ore grade intercept. So lots of prospectivity. We've got over 100 base metals targets to drill. And the more we look, the more targets we find. We're currently mining out of the Far West mine, and we're about to develop Liontown. So Liontown's our largest resource of around about 4 million tonnes. Importantly, it contains about 150,000 ounces of gold in that resource too. So looking to permit Liontown by the end of the year, and then hopefully start some ground disturbance work and get that into production next year. The plant's got plenty of capacity to take Liontown and Far West together. We've currently got 2 drill rigs drilling Liontown and the surrounding targets around Liontown to make it even bigger. And we're also drilling underneath ourselves at Far West. So I'm confident that as long as we keep drilling, we'll keep finding more and more ore and be here for a very, very long time. It's a great place to mine. We've got a residential workforce in Charters Towers, and it hums along really nicely. Our newest asset is Hillgrove. So that's in New South Wales. It's a historic gold and antimony mine. We've currently got resources there of around about 700,000 ounces of gold and about 75,000 tonnes of antimony. Believe it or not, this is the 9th largest antimony resource on the planet. We're in the process of updating the Eleanor Garibaldi resource, which should be out in the next month. And that'll get us over 1 million ounces of gold and 100,000 tonnes of antimony metal, making it the 6th largest resource on the planet. Look, the exploration upside here is incredible. The lack of drilling and the lack of sampling, it really is a place that time has forgotten. I'm confident that we'll find a lot more gold here and a lot more antimony. Pretty much every hole that we drill hits gold. So it's very hard to drill a hole and not hit gold here. And we've got the plant, we've got the tenements, and I'm just really curious to see how big this baby can be. So really, that's the Red River story. We're, base metals in Queensland and gold and antimony in New South Wales. I think the antimony and the Herberton prospects are definite wild cards in the business. Antimony is a critical metal and a very strategic metal, and we've got a very substantial resource here at Hillgrove. Up for questions.
Thank you very much for that. I'll just dive in first. You said that antimony is a critical and strategic metal. What is it used for?
So it's used for a whole range of things. It's used in solar panels, it's used in batteries, it's used in ammunition. So basically used with tungsten to harden ammunition. It's also used as a fire retardant in building cladding and also glass.
Okay, thank you very much for that. Again, turning to our 2 investor guests, Kevin from Franco, Nevada. What questions do you have for Mel?
Okay, this is a small one. Just to put it in perspective, I'm used to like copper gold, where gold's the byproduct, not gold the main and something else being the byproduct. What's the dollar split between gold and antimony in a ton of ore, for instance, roughly?
Sure, and the antimony is roughly $9,500 a ton US at the moment. If I can express it to you in another way, if we had a gold equivalent, the multiplication factor, it's a little bit different for each of our ore bodies, but roughly 1.4. So if you multiply the antimony grade by 1.4, that would get you a gold equivalent.
Oh, okay, so it'd be like a third of the revenue or more from
yeah, in some of the ore bodies.
So it's pretty significant. Okay.
absolutely.
Okay. Bringing in Kate from Parlour, what questions do you have for Mel?
Well, it's funny, it was just making me think, following the conversation with Patrick, but obviously you've got significant copper and zinc production as well. Like, do you have a hedging strategy based on where prices are at the moment?
Look, I guess I haven't been able to predict commodity prices accurately for the last 30 years. And, you know, I guess it's one of the things that the board is always, we've spoken about it. And I guess we've never pulled the trigger on it. Our shareholders, everyone's got a different view. Some want us to hedge, some want us to hedge all, and some don't want us to hedge at all. And then you've got the complication of, you know, which metals do you hedge? Do you hedge copper? Do you hedge zinc? Look, I think there's probably, you know, no harm in hedging a bit, but then, you know, for us, I think being unhedged has worked for us in the last 4 years. We've managed to get through the low cycle when zinc went down to 70 cents a pound, and you know, we're here to capture the high cycle as well. So I think at this stage, remaining unhedged is the right decision for the business and our shareholders. But you know, that could change. You know, depending on what we want to do strategically, we're not ruling hedging out.
Fair enough. I appreciate it's not necessarily a straightforward decision, especially given the volatility that we're seeing these days. Just out of interest, who's on your register? Who are your major shareholders?
Sure. So we don't have anyone above 5%. The top 20 is a mixture of institutions and retail, probably roughly a 50-50 split.
Okay.
The truth is you can't please everyone all the time, right? Especially when you have many shareholders, like it sounds like you do.
Yeah. But I mean, and that's my job really, is to walk that fine line. And you know, like the business itself, we're a producing company, but we also, you know, have got a whole bunch of growth projects and exploration targets. So really, you know, my job is to make sure that the business is producing. We're also expanding, and we're also discovering.
Mm-hmm.
Speaking about expanding, oh, sorry, Andrew, go ahead.
No, you go first, Kevin, sorry.
Okay, I was just going to ask you about Liontown, because you've had that one for a while now, and you're talking about developing it. Has something changed? Is it just availability of capital, or what's driving that forward?
Yeah, good question, Kevin, because when we bought Thalanga, I actually thought that Liontown was our worst ore body. It was our biggest ore body. It was 2 million tons, but it was 8% zinc equivalent. And I don't like developing anything that's not double digits. So really, from my point of view, I parked up Liontown until we discovered Liontown East. So we had some IP undercover, and you know, that generated a target for us. And the first hole discovered Liontown East, and that's about 500 meters from Liontown. And that, after we drilled it out, has ended up being 1.5 million tons at 12.2 equivalent, and it's still open at depth. So that really forced my hand to drill Liontown, because the sum of the parts is material now. And once we drilled Liontown, we not only increased Liontown, but we also, you know, increased the grade at Liontown by 40%. And now it's our best and our largest ore body. And it's also still open at depth. So, you know, in the fullness of time, I expect Liontown to be our, you know, one of the biggest ore bodies in the Mount Windsor Belt. So
Yeah.
It's really transformed.
And you say you had the mill capacity, so you're not waiting for things to wind down at Thalanga. You're gonna aim for both going concurrently. Is that?
Yeah, so we've got Far West producing at the moment, and we actually got an underground rig drilling beneath us at Far West to hopefully extend that. And yeah, we've got the mill has done 650,000 tonnes per annum. We're currently running it at around about 350,000 tonnes per annum. In the front slide, you would have seen 3 ball mills there. So we're currently running 2 ball mills out of the third. So really, it is as simple as switching the third ball mill on to put Liontown through.
Excellent. Thank you very, very much for that. I think that now brings us to the it's just sort of like nearly the sort of like top of the hour. So I think with sort of like that in mind, I'd just like to really just thank our investor guests, Kevin McElligott of Franco Nevada, Kate Southwell of Parlour Investments. Also thanks to our three mining presenters and who are also our sponsors, which are Hammer Metals, Red River Resources and New Century Resources. Of course, I'd like to thank our lead sponsor, the Trade and Investment Queensland, and also our media partners, Resource Global Network. See you at one of our future 5 at 5s or also at one of our future sessions at our online June event. Thank you very much for your time. Goodbye.